Imagine if you had just $100 to invest, and you could turn that small amount into a fortune. What would happen if a millionaire put $100 into the stock market? Well, stay tuned because the results might just blow your mind. Hey, everyone, welcome back to the channel. Today, we're diving into something really interesting, the journey of a millionaire who took a small $100 investment and turned it into something amazing. Now, you might be thinking, $100, that's not much. But trust me, this story is going to change the way you think about investing. 1. The beginning of the story. So, here's the deal. A millionaire, someone who already had millions in the bank, decided to put $100 into the market to test the power of compound growth. This wasn't just a random decision, it was a calculated move. The millionaire knew that investing wisely, even with small amounts, could lead to big rewards. But why would someone with millions even bother with such a small amount? Well, the answer is simple principles. The millionaire didn't just want to make more money, they wanted to prove that the right investment strategy could work with any amount. 2. The investment choices. Now, the key to this story is the choice of where the $100 was invested. Instead of just throwing it into anything, the millionaire did their research. They didn't go for some risky or get-rich-quick scheme. They chose something stable with long-term potential. Stocks, bonds, real estate, they looked at all the options. But after careful analysis, they decided to put their money into a mix of well-known, strong-performing companies and a diversified stock index fund. Why did they choose these? Because over time, these types of investments have shown consistent growth. They understood that patience and discipline were more important than instant gratification. 3. How the investment grew. Let's fast forward a bit. Over the next year, the market experienced some ups and downs, but the overall trend was upward. That $100 grew, and it grew steadily. The market doesn't usually explode overnight, but if you pick the right investments, even a small amount can begin to grow quickly. The key here is patience and consistency. After 1 year, that initial $100 investment was worth around $120. It's not a huge jump, but remember, it's only $100. The important thing to remember here is that small, consistent growth is how wealth is built. The millionaire wasn't just focusing on short-term results, but thinking about long-term gains for the bigger picture. But here's where it gets even more interesting. That $120 over the next few years started to compound. When you reinvest your returns, they start earning more returns, and this snowball effect accelerates over time. Now, let's do some quick math here. Let's say that $120 continues to grow at an average rate of 8% per year, which is about the average stock market return, after 10 years. 5. The millionaire strategy. So, what's the takeaway here? The millionaire didn't just focus on making fast profits. Instead, they focused on smart, sustainable strategies. They weren't chasing quick money, they were using their knowledge to make long-term decisions that paid off over time. Even with small amounts, anyone can start building wealth. The millionaire's secret wasn't just in how much they had, but in how they used their knowledge to grow what they did have. What if I told you that you could retire way earlier than most people without winning the lottery or having a trust fund? Sounds impossible. Well, stick around, because in the next few minutes, I'm going to show you exactly how to retire before 99% of people do, and how you can get started today. 1. Start with financial education. First things first, knowledge is power. Before you can retire early, you need to understand how money works. This means learning about budgeting, investing, and most importantly, the difference between assets and liabilities. Now, here's the thing. The majority of people don't think about money in the right way. They spend what they earn and sometimes even borrow to spend more. But if you want to retire early, your mindset has to shift. Here's what you need to know. Assets are things that put money in your pocket, like rental properties, stocks, or businesses. Liabilities are things that take money out of your pocket, like car loans, credit card debt, or unnecessary expenses. Your first goal is to build assets, and this is where financial education comes into play. You need to learn how to invest, how to make your money work for you, and understand the world of passive income. 2. Develop multiple streams of income. Okay, now that you've started to learn about money, you need to build multiple streams of income. This is key to retiring early. If you rely on just one paycheck, you're going to be stuck in the rat race forever. Here are a few ways to start. Investing in the stock market. This could be through index funds, dividend stocks, or even individual stocks if you're willing to do the research. Side hustles, freelance work, e-commerce, or even renting out a spare room in your home. Anything that generates extra cash flow. Real estate. If you have the capital, buying rental properties can be a great way to build passive income. The more income streams you have, the faster you can grow your wealth and retire sooner. Remember, it's all about having money coming in from different places, so you're not stuck depending on a 9-to-5 job. 3. Cut unnecessary expenses. You might be surprised by this one, but living frugally is one of the fastest ways to retire early. Cutting down on expenses doesn't mean living in a shack, but it does mean being strategic about what you really need. Here are some simple ways to cut back. Live below your means. Don't try to keep up with the Joneses. Buy quality items that will last instead of constantly upgrading. Live below your means. Don't try to keep up with the Joneses. Buy quality items that will last instead of constantly upgrading. Avoid lifestyle inflation. As you start making more money, don't just spend it all on fancy stuff. Invest the extra cash. Track your spending. Apps and budgeting tools can help you stay on top of where your money is going. By cutting back on unnecessary expenses, you free up more money to put into savings and investments, speeding up your path to retirement. 4. Focus on high-impact investments. Once you've got your finances in order and you're making more money than you spend, it's time to put your money to work. This means investing it in things that will bring you a high return. Some of the best investment options are real estate. Rental properties are one of the most reliable ways to generate passive income. The stock market. Dividend-paying stocks or low-cost index funds can grow your wealth over time. Start your own business. If you're entrepreneurial, starting your own business can generate massive returns and could eventually be sold for a significant profit. The goal here is to invest in things that will work for you while you sleep, so you don't have to work until you're 65 to retire. 5. Mindset and long-term vision. The last step in retiring early is your mindset. You've got to be patient, disciplined, and focused. This isn't going to happen overnight, but if you stay committed to your goals, you'll get there. Here are a few tips to help you stay on track. Set clear goals. How much money do you need to retire? What kind of lifestyle do you want? Define it. Be disciplined. Stick to your budget and investment strategy and avoid making impulse decisions. Stay motivated. Keep your eyes on the prize. Remember, retiring early isn't about working hard forever. It's about working smart now to enjoy freedom later. And there you have it. The 5 key steps to retiring before 99% of people. It's all about smart financial decisions, building assets, cutting expenses, and having a clear, focused mindset. Remember, early retirement is possible for anyone, no matter your current situation, as long as you're willing to take action and commit to making it happen. If you found this video helpful, make sure to hit the like button. Subscribe for more tips, and share this with someone who needs to hear it. And don't forget to leave me a comment. What's the first step you're going to take toward retiring early?